I haven't done a recap video in a while, and wanted to just do this for myself to compare my older videos to see if anything trains in the strategy, but the logic I think is all the same. Um, the main levels I'm going to be talking about are Ludwig levels, support and resistance radar, uh, maybe the VWAP, but those are the indicators I got on the chart for now. So the logic was once this Ludwig level broke to the upside to touch support and resistance radar, the play was a touch and go long. My entry wasn't great. I should have been in at 75. I got into 78 with two contracts. Had a little pullback. I was going to add in at VWAP and then play the bounce back up to Ludwig. That never happened. It kind of blasted right through. Now actually market was open here, so I took the profit perfectly at 80.75, which is the bottom of this blue level here, which you can't see it right there. And now the market's open. Usually I'll let it breathe for a little while. So crazy move up. So the logic of the trade was right. Ludwig level broke. We're going higher. Boom. And I could have got a hell of a lot more, but it's open. You don't know what's going to happen. So I took the quick money. A lot of times I might short a Ludwig level, but not at market open. I was waiting for more of a move before I jumped in. And I'm going to explain this trade. It's the first trade I ever created as a dollar cost average MNQ trader, or really any market, but specifically MNQ. So what's happening here, this green line is the high of the day. And you can see this was the high, and it just created new high, new high, new high, new high. This green line here and the white line here, that's second standard deviation, third standard deviation. The red line is first standard deviation. Now it's market open, so they're usually not as reliable. And you can see that push up, but it did push up past into this level. So this particular trade, I call it the bouncer trade, and the price does bounce from it. But it's more like being a DJ. The analogy is the green door is the club. The white door is the back of the club. There's too many buyers in the club. The bouncers are going to throw them out. They're going to bounce the buyers out of the club. And you can see my first entry, perfect. As soon as they entered the club, and what happened? A little bit of heat, 4, 5, 6 points, and then I had two targets. They both got hit. Right there is probably a $40, $50 trade, somewhere around there. in micros, that is too. So what I normally would do, again, if it wasn't market open, I would long this. And if it didn't go long, I would add in and then get out there. Or you could say I would have just got profit. Didn't take it. I was probably thinking more shorts. But well, look, I did take it. So once it kind of held up, once and twice, I took it the third time, playing it up a couple levels. And that was another nice, probably 15 points or so, maybe 7 points per contract, somewhere around there, 13, 14 points, but another $20, $30 trade. Now the level breaks. I didn't trade this. I do like longs here. Again, you're in here, and you're out there taking some quick profit. Didn't take it. I was probably being a little more conservative because I don't trade the open, but it was a test account, so it's probably getting a little more. Again, same kind of concept. Broke the level, entered. Again, I was 2 points off, exited, but that's a good 7 points. I think the second contract got stopped out, but there was money made there, even if it was 7 points. Same move again, it comes down. I didn't have a great entry, but got out at 18. Perfect exit. And, I think I got money on one, broke even on the other. But another 6, 7 points. It adds up. Coming into that bouncer trade again, I don't know if I took it. I usually don't like to trade 5 minutes to 10 in New York, 5 minutes after 10. So that's probably why I didn't take these. But you can see, look how perfectly the bouncer trade. It's past this green line. You can add in, and then get your money when it drops. You also had a Ludwig up here to protect you. Usually it hits this level and gives you, 10, 20 points at least. And there you go. Hits it. Pretty odd move that it didn't really, it gave you a little bit, but not enough. Now it's 10 o'clock again. This is news time. I generally don't trade it, but now I couldn't resist. This is a very strong Ludwig level, which you can see. That's where I entered. Figuring even if it did go, I was going to get some kind of pullback to get out. And the goal is to get out here, but I'm not sure. Yeah, and I did. So a lot of times what happens, if it breaks a Ludwig, it generally touches and goes. So I had an absolutely perfect exit at 97, a point above the level. And it did go back up, and it could have continued up. Now it came back down. It looks like I didn't get all the contracts out, but I did on this one. So great play right there, adding up the points in and out. Again, entry, once I see it can't make new highs or it's struggling, I played this level down to this level. Another perfect trade. 7 or 8 points each, or at least another 7 points. Another winning trade. Again, entry again, and I was, oh wow, I actually went long there. Crazy. So I did make that money there. And I guess once the Ludwig broke, I played the long from here to here, this level to this level, to the new high of the day. Normally, if Ludwig's going to hold, it's pretty strong. It won't peel through like that. It'll bounce right off. So once I saw it broke, I probably just put the order there and load it up. Now, highs of the day, we're in the club again, thinking we're going to get thrown out. There you go, perfect entry. Another, that was 10 points, 20 points or so. It was up for like 350 for the day, the account, by the end of the day. Again, same exact trade, boom, playing it from, highs of the day and standard deviation level 2 to Ludwig. Boom, boom. And I'm taking my profits a little bit early. Again, Ludwig, we're thinking this is going to go short. Add it in and targets. And I got my targets actually a little below it. I expected this to break to the downside because it really wasn't convincing. And up here, generally will come down. I was, should have played it down to here. Eventually, I'll probably hit there. Yeah, it never hit. So this is pretty bullish action here. But, once it comes high of the day, second standard deviation, this is the club getting thrown out. Entry. I'm still in it, and I held this one a little bit longer for a little longer move down. So, yeah, I was in at 23 and 16 and took it down now. All right, so it was this was a good trade. Another 30, 40 bucks, easy. And again, target right above the support and resistance radar, and that's on purpose. And you can see why. It touched, it never filled me there at 10. But it got me out at 8. So it stopped right above the level. So this is why I try to take it at the top of these levels. So just perfect trade, entries and exits. This looks like, I thought this was going to really spike down quicker to this level because it touched and went, but I still think we were going to the downside. We were going to levels down here. So I thought these Ludwigs were eventually going to break, and I think they did. So I was getting out of break even here when it was fighting like this. Anything can happen. So just get out. It was good trade management. Took break even on that one because it was just playing around too long in this area, which meant this level was holding. So it didn't. If it was going to get through, it was going to get through. And sure enough, it blasted up, and I was done. Again, these trades would have worked. I was up so much at this point, I really wasn't taking any chance. I think I was kind of sort of done at this point. I might have took a couple more, but those would have won if I was trading. Yeah, I might have been done for the day then. So you can see, and the strategy, if I would have continued trading, those shorts were winning, and I was kind of more short mode here, even though we were so high. This Ludwig, I could have took some longs there. So that's the logic, that's the strategy. Yeah, so I was done trading, and it was up 350 for the day on the account with micros. I might have took one mini at some point on a different chart. But you see, playing these shorts, with this strategy, I think if you were going long or short because it was in range, you would have won either way. If you were going long here, you would have added in, you would have won. If you were going short here, you would have won. Either way, you're winning. So again, it's a good trade management strategy. If the market is ranging, you're going to win both ways. I was more short mode up here because it was at the highs, and sure enough, that was the right direction. Now, where would I get in trouble? If I went long here, which I could have, but I was thinking more shorts, so I probably wouldn't have. This is where you never got that pullback, and there was nowhere to add in here, no levels until here, and it just blasted through. So if I was going to lose a $200 trade, it would have been in this area. I don't think I traded any of this. Big blue, I do like to go long, so let's see what happens at that level. VWAP, I like to go long, and now you could see those trades would have won. Again, even if you want long here, once I see this turn pink and I get out, I'm not going long anymore. I'm thinking shorts. And again, perfect right move. Like short, VWAP tops, Ludwig top, short. That's the move. Here, I might go long, and you could get in trouble. It never hit. I think it blasted right through. Yeah, you're in. And once I see this break, I'm getting out, break even or profit. Now I'm like, let's see what happens with the level. And it did held up. So the longs would have held. Again, I would still be thinking long here. Once this happens, I want to get out. Get out, break even. Let's see what happens. And look at this. Once this goes, now, all right, we're in short mode. We're looking for the touch here, but you could play these levels short too. Touch of any level and then add in above level. So all the shorts are winning. Another Ludwig level. Again, probably stop trading here because it's just going crazy. Still thinking shorts. Short in the Ludwig. First touch here, of course, wins. Again, here, if you want to go long, you got it. Now you're holding up. If anything, you're going to go short here, level to level. You could have won that. Once it breaks, now you're thinking shorts again. And if you were, say you went long here, you added, you're out here. Your dollar cost average, your break even or in profit here. And look where it stopped. A point or two before. This is why I get out before these levels, because this happens over and over. It stops shorter levels, so you want to have your targets, your escape. Even if you took a small loss, get out there. I mean, either way, you got out. So the trade management, and this is, I don't trade at 2 o'clock in the afternoon. I'm done by 11 or earlier. That's the strategy. I'm going to go compare it to some of my older videos. I think my logic is exactly the same. And it's been very consistent. So thank you to the Ludwig levels and support and resistance radar.